Today, folks, growth, value, dividends. We're going to be talking about your questions answered, comments surrounding Jeremy, financial education, tattooed chef, which, oh my God, we're going to be getting into SCHD, some of these broader ETFs, a lot of drama around those guys too, and a little bit to do with Berkshire, Hathaway's, Warren Buffett, Charlie Munger. It's been a really fun and entertaining week. The market never ceases to entertain me, so I hope you're enjoying these videos because, my God, it's been a pretty flat week all in all, so this drama is kind of lighting us up a little bit, and I feel bad for the TTCF shareholders because Jeremy single-handedly just destroyed this company, and anybody left bag holding here. The stock, I mean, it's down 18% just today alone, 40 or 50% since like last week. Jeremy made his video going into the weekend, leaving everybody that held those shares for the weekend just devastated. I mean, come Monday here, what a destruction this week for this stock, man. And you guys, you know, in the video I made about Jeremy, even pointing out a lot of funny things, like Jeremy lost more money last year than all his gains from 2012 to 2021. So he has a negative 10-year annualized return during the biggest bull run. I don't know what his actual return is over the last 10 years, but I do know that he openly admitted that he lost over $3 million, and it's not a surprise with a lot of the companies he picked going completely bankrupt. There was the Very Good Butchers, a company I worked with in the vegan space, Tattooed Chef, you get into the crypto space with Voyager Digital. I mean, the guy couldn't touch anything pretty much in the last few years here that just didn't completely devastate him outside of Tesla. But most popular financial YouTubers like Jeremy make most of their money from monetizing their videos, ad sponsors, selling products, not from the stock featured in their videos. Yes, this is for entertainment value only. I make, probably at this point, I'm making more money off these YouTube videos and working within the YouTube space than I am probably making off my stock portfolio. That might have been debatable over the last few years, though. I mean, you can compare him to Meet Kevin or even like Graham Stephan. I think Graham Stephan's been a horrible stock picker, and something tells me he hasn't had any real good returns from the stock market as much as he has from real estate or his YouTube channel and things of that nature, right? But continuing on here, I knew the plant-based food movement was dead the day it started. It doesn't take a genius to figure that one out. Yeah, I wish I was a genius. I would have shorted it. I would have shorted the NFT market and the crypto market and the damn speculative bubble that bursted. Hell, man, I got caught in a little bit of that tailwind, and I got hit pretty hard to some extent. I just got out. Damn, I ran with my tail between my legs. I was horrified of what was going on, and I like my money too much to ride that bull market wave. I don't know where I'm coming up. It's Georgia. Get my peaches in Georgia. Wondering if you have any tips for someone who has a portfolio full of speculative stocks but doesn't know when to sell them and shift that money to a more traditional portfolio of ETFs. I know the market is down right now, but don't know if it's worth waiting a bit or not. This is a question you're gonna have to answer for yourself. I'm not a financial advisor by any metric here, but for me, like I said, I just mitigate my risk in the market by always trying not to make an individual position more than 5% of the entire portfolio. If it's mostly speculative, you feel under diversified, sometimes it's just better to take the losses and move on. But if it's only a little bit of money, like if you're talking about a small portfolio, you know, you've only got 500 or 1,000 bucks and it's spread out between these speculative stocks, you could probably just let it ride and kind of out earn those losses and just start buying ETFs or safer investments or whatever works for you. I can't tell you what works for you. We're all in a different boat here. Speaking of what works for some people and doesn't, the Schwab US Dividend Equity ETF. This is probably one of the most hated ETFs I've seen in a while. I've never seen so much drama. It's like one of my most viral videos in a while. I think this video has like 8 or 10,000 views right now, and I only posted it a week ago because so many people are up in arms about it. And we'll answer some of the questions, comments, and concerns here. First, Dominique, the issue with SCHD is that it exploded after the pandemic up to May 2021. 2 years later, it's down 8%, while the S&P is down 2% for the same time period. Based on the share price only, even with reinvested dividends, I think it would still underperform slightly, but the bank turmoil have very little impact on SCHD, and it's still a good ETF. And yeah, I honestly think SCHD, if you're looking for dividend income, if you're somebody that needs income, like I, privatized work, where if I lose my job, I enjoy having the extra income. I like this ETF because it's really profound in its performance, which we'll talk about, because a lot of people said SCHD is the way to go if you want dividend income, but for me, I prefer VTI. The return of capital on VTI is much better than SCHD. The only downside with VTI is the dividend is half of what SCHD is, and that's the thing. If you want growth, I can show you so many ETFs that outperform SCHD because it's not a growth ETF, right? VTI is like the broader stock market index for the US here, the total stock market index, and you can see over 5 years, the 5-year performance comparables are really intriguing here, because over 5 years, VTI is only up 45%. I mean, where SCHD is up 40.1% or 41% roughly. But if you tack on the fact that it's paying over 3.5% yield against VTI's 1.5%, I mean, you actually are almost at parity with performance, especially if you're reinvesting the dividend. And over the long period of time, if we kind of take a look from the 10-year from January of 2013, this is up 131%. VTI is up about 170%. But again, over that 10-year period with the dividend growth SCHD offers, I mean, you tack on, 10 years, 3% is an extra 30+%. I mean, again, we're not talking about too much of a variable difference, right? This is why I like SCHD so much, and why I see comments like this. Oh, you just needed to make a video so some money comes rolling in, baby. You're not wrong. I'm making videos to make money. So what's your qualification to rip into this ETF? I have no qualifications to rip into this ETF. And by the way, it's an ETF, not a stock. I know, but when I put stock in the title, it's better views. Nobody really searches ETFs as much as they do stocks. So yeah, I don't have any qualifications. I've just done a lot of comparables. I've listened to a lot of investors, even the dividend investors out there, like I mean, PPCE have started buying this ETF because it's just really resilient. It's literally like one of the best ETFs I've ever come across. Instead of me buying all these dividend stocks I love, like Home Depot, like Pepsi, this does it all for me. It takes the management out of my hands, makes it more passive. It's a one size fits shoe for me. I was going to say fits all, but it might not fit all. But continuing on to the Warren Buffett discussion of things, I find this to be very intriguing on comments that I made in my portfolio review saying, hey, what happens to Berkshire stock when Buffett and Charlie Munger at their ripe old age, kind of pass on? I mean, it's an inevitability we're all going to face. And I had a concern that, why aren't they forefronting some of their other management team, like Ted, Todd, Greg, some of these people you guys mentioned, like to start kind of letting them have the light, letting them show that they can captain the ship? Because, you're stating here that Warren Buffett and Charlie Munger are only figureheads of the company. The person who currently runs the company behind the scenes and makes the investment decisions is Buffett's successor Greg Abel. But that's not what it sounds like at all, because, I mean, you heard Charlie Munger say that the greatest thing he ever did for Berkshire was buying, what was it, BYD or whatever, that Chinese electric vehicle company. You hear them talking about their trades with the likes of Taiwan Semiconductors, why it was a bad trade for them, like who made the initial investment, who decided to sell out of the investment. They're the ones flying over when you hear about them traveling and making these big investments in Japan. When it comes to the commodity companies they're buying over there, they actually flew over there. Like, every time I hear about Berkshire, it's like this kind of coincides with these moguls that are getting this ripe old age of 100 damn near. And it's just, I'm so curious to how the perception of the stock is going to be perceived moving forward after that. And some of you think it's priced into the stock. I see some comments here. I agree, but it does seem odd that Ted and Todd do not speak during the meetings. However, I'd argue that the succession uncertainty is already priced into Berkshire, and I do think Berkshire stock is favorably valued here as well. But that, again, is the market is perception. Even though stocks can be favorably valued, that doesn't mean there's people that are like, well, I was betting on these guys managing the company, not these new guys. And a lot of people I don't even think have ever heard the name Ted or Todd. But I will pass that question off to you. As always, I'd love to know what you think in that comment section below.